Hello and welcome back to the channel. Now today I'm going to show you one of the strategies that I use to earn consistent passive income in crypto. I'm going to show you how I do this step by step with almost zero risk. And you know, it does sound way too good to be true, but I'm going to show you exactly what I do, how I do it, so you can get started with doing this yourself at home as well. The platform that we're going to talk about today is called Mirror Finance. I did recently make a video about synthetic assets and talked a bit about Mirror Finance on there. So if you haven't watched that video, definitely go check that out on the channel. And without further ado, let's get straight to it. Just a quick message from our sponsor today. If you're looking to stake your Luna, then go no further than one-star validators. They're a small community growing with the Luna ecosystem, and you can go stake your Luna there and of course earn some nice staking rewards. I'll leave a link in the description, so go check them out. So we're going to jump straight onto the computer. In case you're not aware of what Mirror Finance is, it's a application on the Terra ecosystem in which you can essentially buy and sell these synthetic assets. So let's just show you, because that's probably the easiest way for you to understand. Now, to access all of this sort of stuff, you do need a Terra Station wallet. You can just Google that, create a wallet in a matter of seconds really, and then you can get started. So let's have a look what we have here. So if you go to my page, the first thing that you'll see is how much UST you have. UST is the currency of the Terra ecosystem. It's an algorithmic stable coin that should in theory always be $1. So one of the benefits of using UST rather than, you know, Luna or Bitcoin or Ethereum or whatever is that there's no volatility. This is something that's always going to be stable, using stable coins of course, and therefore, you know, it's quite good when you're earning consistent income, because you know exactly how much you're going to earn every single week, every single month. And I like that, to be fair. I like that. And especially when you have red weeks like the market is in right now, when everything drops 20%, well, you don't need to worry because you don't have any exposure to that sort of stuff. So where can you actually buy UST from? Well, you can buy it from Coinbase. You can buy it on decentralized exchanges like PancakeSwap. You can buy it on Uniswap and obviously bridge your funds over to Luna. You know, there's lots of different places where you can buy UST from if that's something you're interested in. I can make a video about that in the future, but you know, it should be relatively straightforward. Again, if you have any questions, you can always send me a message. I'm happy to help out anytime. So you do need to get yourself some UST, and you know, you can see I've got 14,000 at the moment. I'm on the testnet, so you can go on the testnet yourself, get yourself some free UST and play around with this. Enough of me rambling on. Let's actually show you what this platform is all about. So if you go to trade on the left hand side, you'll be able to see all these different assets. You can see mirrored Coinbase, Facebook, Goldman Sachs, Apple, Airbnb, etc. You know, you scroll down, you'll see lots of these different companies, and you have to remember that these aren't the stocks themselves, rather they are mirrored assets that essentially track the price of these stocks using something called oracles. And you know, you can have a look here and you can find that Amazon is $3,466, and you'll probably find that in real life it's a very, very similar price too. So yeah, these oracles do a very good job of tracking, you know, these underlying assets and making sure that their price is very accurate. And you know, there's loads of benefits to holding these, and you can find them out for yourself if you watch my video. But today what we want to focus on is exactly how you can make money from them, how you can make consistent passive income from them. Because normally, if you were to just buy Tesla, the only way you're going to make money from them is if Tesla stock price goes up and then you sell the stock. We're not talking about that today. We're talking about ways where you can actually make money on a daily basis doing this. And the way to do that is to go to this section here, the farming section. Now, farming is essentially locking your asset up into a smart contract and then being rewarded for doing so. And that's exactly what happens here. Now, the reward that you get in this circumstance is the native token for Mirror Finance, the Mirror token. And you'll be able to find here, the Mirror Protocol token is currently worth $3.17. It has a market cap of almost $250 million. And yeah, this is what we're going to be farming. This is what we're going to be earning as a reward for locking up our assets. Now the thing is, with the Mirror token, as you can see from its all-time high in approximately May 2021, it was almost $12 back then, and since then it's gradually just decreased and decreased and decreased. Although it has had a little rebound since then, you know, we're at this $2, $3, $4 mark, whereas beforehand we were at, you know, $10+. And the reason is because people are farming. and people are selling. Look, that's the catch. That's the loser here. You know, you might say this sounds too good to be true, how you can be earning consistent passive income. Well, look, there is always a loser, and in this case it's the mirror token. So let's actually have a look in detail about how this actually works. So essentially we want to be locking up our assets like Google or Facebook or Netflix, etc. into this smart contract, and then obviously we're going to earn rewards, and currently these percentages that you see next to the long and short side are the actual reward that we get. Now, because I'm on the testnet, it does show quite a ridiculous APR. On the mainnet, you're looking at between 30 and 50% per year, which is very nice. You know, imagine owning a Facebook stock and earning 50% on that per year. I mean, it sounds very, very good to me. Now, the way that it actually works is that you can see next to these assets, we've got a column that talks about the long farm and a column that talks about the short farm. Now, essentially in the stock market, if you were to go long on the stock, you're essentially hoping that the stock price goes up. And likewise, if you were to put some money on the short side of things and you were to go ahead and short a stock, you essentially, you know, sell the stock only to buy it back at a cheaper price. And that's what a short position is essentially. Now, if you were to put, let's say, $1,000 on the long side of a stock and $1,000 on the short side, well, you wouldn't actually make any money, and that's because you're kind of delta neutral. It doesn't matter if the price goes up, your long position is going to go up, but then your short position is going to go down. And likewise, if you think the price of a stock is going to go down, but you've got an equal amount to both sides, well, it doesn't matter because your short position might be worth more, but then your long position is going to be worth less. So there's no point in really doing that. However, right now, that's exactly what we're going to do. And that's because we're getting paid in the mirror token for doing so. So essentially, we're basically saying to ourselves, we don't want any exposure to any volatility of any price action. And instead, all we want to do is just take the reward of the actual mirror token that we're going to get. So what we're going to do is we're going to pick one of these assets like Facebook, for example. Let's pick Facebook. We're going to put an equal amount on the long farm and an equal amount on the short farm. And therefore, it doesn't matter if Facebook's price goes up or down because we're going to be completely delta neutral. We're going to have an equal amount on the long and an equal amount on the short. So it doesn't matter what the price does. And I'm going to show you how to set that up, and then I'm going to show you how the rewards and things come into play as well. So, you know, this works. This is a real life, you know, scenario of, you know, a way to make passive income. And, you know, I've been doing this, like I mentioned earlier, for quite a few months since Mirror version 2 came out. I love it, and you know, it pays me passive income, so happy days for me. So let's go ahead and set up one of these positions so we can actually start earning this passive income. So you've got your UST on your account. That's the first thing that you need to do. You need to get yourself some UST, and obviously you need this on a Terra Station wallet. If you haven't got a Terra Station wallet, just go to Google, set one up. It's very easy to do so. You'll have your wallet set up in just a matter of minutes. Okay, you've got yourself some UST now. What we want to do is we're going to start with the short farm. And essentially we're going to start off with shorting the Facebook stock. So we click on this, and then over here you'll see that there's a collateral asset that we have to, you know, give. And that's because essentially we're shorting the stock. We're not actually owning it, we're shorting it, and we're going to obviously buy it back when we close the position. If you don't understand what shorting is, just, you know, have a little Google and you'll pretty much understand what it actually means. So, you know, we can essentially, let's say we're playing around with 10,000, and obviously you can adjust this depending on however much you've got. So if we want to play around with 10,000, then essentially we want to put 5,000 on the short position and 5,000 on the long position, and therefore, you know, we're kind of equal. So we want to put $5,000 here, 5,000 UST. Now the thing is, you don't actually need to deploy UST as your collateral, and I'll show you why. There's an actual way where you can actually earn even more money from doing this. So if you click on this, you'll be able to see that there's something called AUST on here. And now obviously you can deploy, you know, other assets as collateral, but we want to avoid volatility. So we're gonna go with something safe and stable, and therefore we're gonna go with UST. Now AUST is interesting because that's Anchor UST, and that is essentially a stable coin that appreciates 20% a year. So we're gonna use that. And you might think, well, you know, I don't have AUST. How do I get AUST? Well, again, watch my video on Anchor and Anchor Protocol. I did make a couple of videos and I'll show you everything about the Anchor app. But essentially we're going to go to Anchor, which is another application on the Luna ecosystem, and essentially we're going to deposit our money here. So we're going to deposit 5,000 UST into Anchor, and in return we get AUST for doing so. And AUST is an appreciating asset, so obviously, you know, we're not going to get 5,000 AUST, but instead we're going to get, you know, something that represents this in AUST. So we've deposited our 5,000 UST, which is half the amount, and this is what we're obviously going to use for the short farm. Now if you go back to Mirror here, and I may just have to click off it and click back on it just so it refreshes. We'll go to AUST, and you'll see now we've got 4,470 AUST, and that represents 5,000 UST. We're going to keep the collateral ratio at 200%, and obviously that's to avoid being liquidated. And obviously in return, this is how much we're shorting. We're going to be shorting 6.63 Facebook stocks. And you know, this, so when you short something, obviously you're selling it. Now, essentially on this platform, you have it locked for 2 weeks. In 2 weeks time, we can basically take our, you know, $3,194 out. The reason why this is this much is because remember, there's a collateral amount of 200%. So we're gonna basically set up this farm now. We just click submit here. And you know, once this is set up, we'll have our short farm set up. You know, we're gonna have 5,000 UST on the short side of Facebook. There you go, it's completed. So if we go back to my page now, you'll now see that oh, here you go, look, we've got a collateral of basically 5,000 UST, and you know, here's our Facebook short positions set up. And now that we've got this set up, we will start earning mirror tokens in real time, which is, you know, a really, really good thing. So we've got the short side set up, now we need to set up the long side. Now there's two ways of doing it. You can either go ahead and go to trade and just buy $5,000 of Facebook, or you can do what I'm do and basically expose yourself to a small amount of risk, and that risk is obviously with Facebook. And essentially we can provide liquidity for Facebook. Now when you provide liquidity, you're exposing yourself to a small amount of risk, and that risk is essentially if Facebook really, really plummets in price. I personally don't think that's going to happen. Now if you are worried about that, then essentially just go with the normal way, just buy $5,000 worth of Facebook, and you're essentially covered because you've shorted 5,000 and you have 5,000. Doesn't matter what the price does, you're covered both ways. Now what we're going to do is we're going to essentially take the amount of Facebook that we basically shorted, which was 6.63, and then we're going to provide an additional amount of liquidity, and then we're going to farm that, and I'll show you exactly how that works. So the first thing that we need to do is obviously buy that amount. So let's go ahead and buy 6.63 Facebook shares. This should only take a few seconds. There you go, completed. We'll go back to my page, and now look, you can see I've got this obviously 6.63 Facebook shares, and I've also shorted 6.63 Facebook shares. So we're kind of equal now, and now my position is sorted, but we want to take it a step further. We want to farm, and we want to earn this long farm position as well. So what we're going to do is we're going to enter the long farm, we're going to enter that amount of Facebook shares, and it will automatically fill up with an equal amount of UST, and we're going to click farm. We're going to pay the transaction fee, and if you notice, transaction fees on Terra are, you know, not too bad. They're about 1 UST per trade, which, well, you know, I paid 1.7. You know, personally, I don't mind paying that. On the mainnet, I believe it's even lower than that. So there you go. We've actually set up our position now. Now, it might be a bit difficult to understand exactly what's going on here, but let me try and show you. So here's our farm. We've got our short farm over here on the bottom. We've got 6.63 Facebook shares, and this is worth our total amount basically from here that we've shorted, and you can see that's 5,000 UST. We also have our long farm. Now our long farm is actually worth a little bit more. It's actually worth 6.3 thousand UST. But the good thing is that now we have an equal amount on the short side and an equal amount on the long side, and therefore we've essentially accepted that it doesn't matter if the price of Facebook goes up or down, we're completely delta neutral, we're equal. And now that we've got these positions opened, we essentially don't have to care about the price of Facebook anymore. Instead, all we need to do is essentially claim our rewards. Now in real time, this will go up, especially during market opening time. And we'll be able to start claiming mirror rewards. Now this will continuously go up, and what I like to do is basically once a week, basically claim all the rewards, and then you can do what you want with it. You can sell it, you can keep it if you think mirror is going to do well long term. Personally, given the way that the tokenomics are at the moment, I prefer to just basically sell the UST, and you can basically send that to your bank account, or you can basically buy more crypto, or do whatever you want with it really. The choices are endless. You don't have to worry anymore because your positions are essentially hedged against each other. You're using stable coins, and now you basically just earn the reward. You just earn the rewards. And it's amazing. Now if you want to close the positions, it's very, very easy to do that. You can literally just unstake like this, and if you want to close your short position, you simply just click manage, you click close, and then you essentially just have to basically provide that 6.63 Facebook shares and click close, pay the transaction fee, and you're done. You're done. So yeah, that's how it works. That's essentially how I'm able to earn passive income with using a platform like Mirror. It's very simple to set up, as I've just shown you now. I understand that it is a little bit complicated to set it up, and therefore if you want me to make another video about it, or if you want to just talk about it or go through it, I'm happy to help out. I'm always available on Twitter, so just send me a tweet. I'll happily help you out and help you get your farming position set up. There's also lots of good resources and videos on YouTube, so definitely go check them out. But yeah, this pays me about 50% a year, and I enjoy that. It's free, it's relatively low risk. Now, that's something that we didn't talk about, risk. There are two main risks that come with this, maybe three. The first one is a smart contract risk, and that is essentially if the entire Mirror platform goes down, or if the Terra blockchain goes down, then you're kind of stuck and you won't be able to get your assets back. Is that likely going to happen? I don't think so. These platforms are audited, and if you really are worried about it, you can get insurance. You can get insurance. Now, for some reason it doesn't say it on here, and I believe it's because I'm on the test net, but when you go onto the main net, you'll be able to see a button here that says get insurance. It's exactly the same as getting insurance on Anchor. Just click this button, you'll be able to see a bunch of different applications or like insurance providers. Just click on them, go to their platform, and get a quote to basically protect your position. It's very simple to do that. The other thing that can happen is that, remember that these assets aren't the actual underlying assets. They're different. They're mirrored assets, and therefore things can happen, especially if, let's say, everyone decided to sell their mirrored Facebook stock at the same time. Yes, that would affect the price of the Facebook share. So just bear that in mind. I do think that because there's oracles in place, like, things would go back to normal, but you have to be aware of that, and that is something to be aware of. And yeah, of course, the third thing is that if you are providing liquidity like you are in the long farm, there is a small chance of having something called impermanent loss. Now, I personally don't think that it's that big of a deal. It's only 25% of your position that's basically at risk, and even then, the risk is very minor. Like, I personally don't think we're going to see major volatility with Facebook stock. I don't think that's anything to really worry about. And to be fair, if you open this position, you should be earning quite a lot quite quickly to cover yourself, if that was the case anyway. And then after that, you can basically keep the money for yourself with the mirror rewards. If you want to actually compound this effect more, there are other ways to do so. There's a couple of new applications called Spectrum and Apollo, which I may cover in future videos. You can also stake your mirror tokens that you get, and I believe currently they pay you about 40%. Now, for some reason it says 0. It's definitely not 0. And you can you know, compound your effect a little bit more. For some reason it's saying 0.82. It's definitely not 0.82. It's more like 40-50%, somewhere around there. So you can compound your effect a little bit more, and obviously that's sometimes a good thing as well. That's pretty much all I have for you today. Thank you very much for watching the video. Make sure you smash the like button, subscribe to the channel, and I'll be back with another video soon.